Senior managers are responsible for around a quarter of frauds carried out by insiders within businesses. Chartered accountants, more than ever, need to be alert to potential signs of fraud and manipulation of a company's financial position. We examine a real case of a chief financial officer who tried to manipulate his company's financial position to support its share price and highlight 4 lessons to help you prevent it happening in your organisation. George is the Chief Financial Officer of Creative plc. Creative was recently targeted by activist shareholders who sought to oust the board by arguing that the company was not well managed. George was under pressure to ensure that EBITDA and profit numbers showed growth. His problem was that the financial year had been a rocky one. A couple of major customers had hit financial difficulties, delaying 2 key projects that Creative was working on. Shortly before the year end, George raised a number of invoices on these projects, but did not send them out. He also arranged for credit notes to be issued for certain outstanding debtors, and for the amounts to be re-invoiced with slightly different details, which again weren't sent out to the underlying customers. As a result, the debts did not need to have a provision against them as per Creative's accounting procedures. The steps taken by George gave the impression that company performance was in line with market expectations. George didn't benefit personally from manipulating the company's accounts, but whilst the share price remained stable, he was able to keep the activist shareholders at bay. However, his actions were eventually uncovered during the following year's audit. The sales ledger control account should be reconciled to the sales ledger on a regular basis and be reviewed by a responsible individual. Monthly customer statements should be sent out promptly to all customers, and this should be checked and confirmed by the sales ledger supervisor. Effective whistleblowing procedures should be clearly documented and communicated across the organisation. Finance staff should rotate duties on a regular basis and be trained to spot when colleagues are not performing their duties correctly. Visit ICAEW.com/fraud to find out more.